Hey guys, what's going on? Paul here. Welcome back to another Cardano live stream. Been a while since we've done a live stream, but today I'm joined by the Xerberus team. These two guys have been on the channel before talking about the risk ratings and I suppose the reports they do on the not so good things that happen in the ecosystem. They have a tool that can track it, but things have advanced a lot since we talked last. So anyone coming in, please do share this out. Please bring any questions that you have for what the guys are doing now. I'm going to let them give an intro for themselves in a minute. I'm just making sure to everyone, are we live? Let me know in the comments. I think looking on my end, we should be, and the audio as well. Let us know. But Simon, Noach, thanks for coming back on again. And I'm going to let you guys give the intro to yourselves and we'll see where we go then.
Yeah, wonderful, Paul. It's great to be back, and this time in much happier circumstances. We have a lot to share. We built a lot since our last conversations, and yeah, I'm just incredibly glad to be here. I'm Simon. You know us. You know me from the live streams, and I got Data with me.
Yeah, it's really really happy to be on here with you again. It really has been a while. When you're talking about the reports, we've really done a lot of work. It's cool to kind of get that snapshot of where we were and now where we are today. So really excited to show it all and talk about it.
Yeah, I think so. I'm just looking here. I haven't seen a comment yet to say audio is okay, but looking across the different links here, I think we should be good. Someone just let us know down below. But lots of people are going to know you guys as the risk ratings, and even over on Ada Markets, we integrated the risk rating where basically you give a risk rating for each project based on lots of different factors on the tokenomic side and the on-chain side. But what is Xerberus now? I see we have the doctor there. Good to see you, Doc. Got to meet the doctor at Summit as well, which was great. But coming back to that, what is Xerberus? Outside of the risk ratings, or even you can give the overview of that, but what is the project now? Because we had a quick chat before and it's grown a lot.
Yes. So Xerberus is a risk and asset management blockchain. And the perfect way to think about it is to take on an analogy from TradFi, which is Standard & Poor, or what everybody knows it from, S&P 500. So for the people who don't know, S&P 500 is the largest index fund out there. And index funds in general capture most of the money that people save because it's the safest way to put your money into work in an industry. So what we have created is really just following the analogy of S&P 500, but creating it entirely crypto-based. So instead of S&P 500 doing risk ratings privately, not telling anybody how to do it, we do it publicly. And we do it in a decentralized way, and we do it with a decentralized consensus so that the consumers of our risk ratings always know they're true. Toward the indexes are just the risk ratings in action. So instead of just telling you, hey, this asset is good and this other one is bad, now we assemble your portfolio where, following a few rules, and we can talk in detail about them, you can pick certain portfolios with certain attributes that then are put in what we call the index vault, automatically rebalance without you needing to do anything about that. So you can just put your money into something and know it is well taken care of. It automatically rebalance. And as long as you trust the Xerberus risk system, which again is built to be trusted, you know your money is safe.
Okay, you mentioned a few things there that are different. You mentioned it's a blockchain. It wasn't a blockchain the last time we talked, so we're going to talk about that and maybe the Partnerchain and things like that. But where did that come about? How did it evolve here? I'm happy to see where it's evolving to, and the trading side. Most people who watch the channel know that that's where I love to get into, is that type of system. And I always talk about allocating different percentages of your portfolio to different aspects. And this is one that potentially people could allocate a percentage and it just gets automatically managed for them, is it?
That's correctly. So it works very much in like an index. So if you imagine the S&P 500 looked very different 40, 50 years ago, right? So the top firms have changed over time. The S&P 500 is a fairly simple model because it only indexes by market cap. You could do it in crypto, but the problem is that we are a much less mature ecosystem. So what we really do is we index things by market cap and risk. And so to kind of curate just the market cap, approach because, first of all, our market caps are fairly low compared to the stock market. And we are in such an early time of the market that it makes much more sense to have a bit more cautious approach. But that's exactly how and why Xerberus is so powerful. And you ask about a blockchain. So why are we a blockchain? Because that what we do needs to be assured to be fully trustable and decentralized. Why does it need to be that? Because what we're trying to create is a very important layer for the stack of how do you build dApps and how do you input money into the system for the future looking in the next 10, 20, 40, 50 years. What you really need is this trustworthy player who can identify automatically and for smart contract readable the quality of an asset. So that is really what we choose, this very crypto native way of executing it.
Okay. Noah, do you want to jump in on any of this? Or?
Yeah, maybe just to kind of give my own thoughts of it. It's ultimately, when we were first here at the very beginning, we were talking about risk scores, and truly that's still really very much what we're doing, right? These risk scores and these risk ratings that we're talking about here, that the index vaults are built on top of, ultimately they're just a mathematical equation, a sequence of events that we take on-chain data, on-chain transactional data, and convert them into some sort of objectifiable measurement that we can measure tokens against each other, right? And this is really essential that this calculation or this computation is calculated correctly, right? If it was just running off of our servers, then me and Simon could get corrupted and we could start changing the calculation behind anyone's back without anybody really knowing, and that could affect it negatively. So we really need to make sure that our risk ratings are open sourced and are calculated correctly, right? And this is really where the blockchain comes in. They're really the sidechain, where we're able to process these risk ratings in a decentralized manner, right, where everybody can process them. We can all verify that we're all processing the same calculation, and this is where that layer of trust really comes in for building on top of it other financial tools such as index vaults and things like it. Yeah, that's just
Paul, shall we show it? Because
yeah,
we have
a screen here.
Perfect. So zooming back, I want to quickly show what people are known for us, right? People know us for our risk ratings. And I think if you went to the old app and you just open it, you were confronted with a table. So you just had a table. And that was basically, and it gives you a whole bunch of information, right? We have the risk rating, which inform you about the quality that we assign to a token using our risk model. And then you have the growth score, which is, a subset of that is how strong is this network growing? And this is really the foundation of our index vaults, right? This is really what they're made of. Now, I'll give you an example. So we have right now and it's a preview. So after the token sale, you guys will be able to invest. But for now, this is just a preview where you can learn about the vaults that are about to be launched and how they work. So you see now you have 3 different vaults: Ecosystem Prime, Ecosystem Broad, and Ecosystem Growth. So each of them focuses on a specific aspect of our risk model. So the Ecosystem Prime ones are really the blue chip ones. They're the AAAs basically, and the top leader of the ecosystems. While Ecosystem Broad captures about 50 tokens weighted by risk, so it's very, very broad, as it said. And Growth is really where we tried only to capture the high growth tokens. Let's look into Prime and understand what we're seeing here. You see this chart, right, which started at 1 ADA and then goes up to 15, 16 ADA and then a bit down again to 13 ADA. So what are you actually looking here? Whenever we set up a vault, it starts at a price of 1 ADA. We do that simply to make it very easy for you guys to see if you're up in the gains or if you made losses. So you have a vault contract where you deposit some ADA into it and you get an exchange CSRP token. So that token you can always bring back to the vault, trade back against your ADA. But the interesting part is really, what does the vault do? So the vault takes your ADA and then it invests in this basket based on this distribution. So 32% Snake, 18% IIG, you get it. Now, what happens when the risk rating changes? That is really the magic, because when the risk rating changes, when the blockchain says the different nodes in our network compute that the risk rating has changed, and they publish it, these vaults will take this information off the blockchain and adjust the vault. So there's no human involved here. There's no person who manages these vaults, and yet they automatically and dynamically rebalance based on the risk that we all have perceived. And this is really why this is so powerful, because if you look for the safest way really to invest in your money, but still want to be in crypto, and you want to invest your money, just don't think about it, but you want to be in the NFT ecosystem without all the time need to check. Really, Xerberus is the way to go. And one thing that I want to highlight is, and this is really why we launched the index vaults right now with such passion and energy, and want to just get it out and want to launch them as soon as possible after the token launches. They work. And they work because our underlying risk model works. And this is really also why we want to bullish on them, because it's the ultimate proof of concept, right? In this case, right, this is a back test. So it is not an actual vault that has been managed. But it is the backtest of the vault that we will deploy, and how it would have looked like if we would have had it running for the last 2 years. And if you would have had invested on January 11th, 2023, 1 ADA, you would have checked it out on September 30th, you would have made 16x just by going long in the Cardano ecosystem and rebalancing it without needing to do anything for it. And I do think that is it's a true revolution in many ways. First of all, because it's risk management. Second of all, because it makes indexes very, very useful. But third of all, because it now allows people who are not very good traders, or who don't want to spend the time, or just don't have the mind share to do all of that, to really get such returns and just be safe in the ecosystem. I'm sure, Paul, you have some questions at this point.
I suppose I go back to, we had a quick chat before, so some of the questions that when you were explaining to me before I was firing at you was how the rebalancing works, in that does it take liquidity into account, or is there only so much can be put into these vaults? When you look at, if you look at just the Cardano ecosystem right now, liquidity is low on some tokens. So is all of that taken into account, or how often does it rebalance?
So currently they rebalance. These ones are really long positions. They rebalance anywhere between a month to 3 months ish. And you're right, liquidity is a pretty big issue, right? Especially in Cardano right now, some of the tokens that are recommended by our risk score have little to no liquidity. This is like we're at the final stages of adopting this into the risk model as well, and this is kind of why it's still available soon here, if you will. But yeah, really, it's just looking. What you're asking kind of is what we have here is back tests, and what we need to produce as well is some paper trading as well. And that's in the final stages right now. And then once we do that, we'll be able to start really investing in these vaults, because you are correct. Some of these tokens will, the amount of liquidity will be greatly affected if we were to invest in them as these back tests tell us here.
Okay, and is it just Cardano native assets, or is there other baskets that are outside of Cardano, or can they be managed through these vaults too?
Yes, they can. So the entire application is a cross-chain application, which is greatly enabled by the Cardano Partnerchain framework. So it is really tuned towards interoperability. So you already can see Ethereum and ADA and Polygon coming. There will be more chains coming. So you can literally just flick over and have a look at the Ethereum vault. Has a very similar picture. Of course, on Ethereum, we don't have that many considerations regarding liquidity, because most of the assets have deep liquidity pools. So it is easier from that way also to have large amounts of money deposited being into these vaults. What is also very beautiful to see is that you as a user, you can literally flip through all of these ecosystems and deposit money. Our ultimate goal is to bring back what I like to call the super Xerberus index that contains the best tokens from all ecosystems, and then you can buy that as a CN NFT. So in that moment, you could benefit from any kind of frenzy on any other blockchain within Cardano without ever needing to leave the ecosystem. So you get them ported over. However, that is not yet possible. So we got to be transparent with development timelines. This will come late or early next year, so it's not immediately there. There is still something to be done. We have to transition full from mainnet to a limited, from testnet to limited mainnet. So there's still some work done, but important, right? The vision is very clear. You will get access to it, and you can then benefit from all of these ecosystems right here on the Xerberus platform.
Okay, and for the end user, this is a set and forget that I could take some of my funds, I put them in. Do they get locked in a smart contract on whatever chain I put them into? And then I just can come back whenever and look at it to see how it's performing?
Yeah, that's exactly right. So we also have a very nice My Portfolio picture where you can literally just, watch your funds grow, have an eye on it, and see. Right now, I don't have any vault in this one, so this is, but it would be shown here in the index funds how much ADA you actually have allocated to them, and then you have them in a nice portfolio view besides your normal assets. So that's really the goal. It's invest, forget, or best case just DCA in. They're tuned to be long, right? So this is nothing for high frequency trading or like short term DeFi yield. This is really, I believe, in the ecosystem. I want to DCA into an ecosystem, and I want to hold and be benefit from the overall growth of the market. And I think it's also very good to mention that we have noticed is the cyclical nature, right? You have sometimes the Bitcoin cycle, the altcoin cycle, and then the native asset cycle. And the best way to use these ones is to truly DCA into them across cycles. Really, like you gotta make a goal and just keep DCAing in. At any moment in time, you can recall your liquidity. So there's no lockup, right? It's permissionless. You can just go in and get out whenever you feel like it. But again, it always works better to have it as part of a long-term strategy, because sometimes there are drawdowns, right? It's no magic, right? Like this is just a better way of bundling these tokens together. But it is still a very good instrument if you want to stay in the market and believe in the ecosystem.
Well, the idea, exactly. The idea is that we want to be able to provide tooling and investment opportunities that people can very broadly enter in ecosystems, right? I believe that Cardano in general is going to go up over the next market, and you can kind of see that in the ecosystem broad. It's a much more stable. Simon, go to the second one. Yeah, go to that one. Much more stable. I mean, it goes a little bit further down, right? But when you're looking at like some modern portfolio theory, like things like Sharpe ratios and things like this is a much more safe bet to go into than the other one, because you have much less volatility over time, and you really are able to capture the growth of the Cardano ecosystem across a wide selection of tokens.
Yeah.
And this is so the base asset for the Cardano ecosystem one, would that be ADA? So essentially you're trying to end up with more ADA than you put into it, or is it a dollar based or stable coin?
So currently, right, as they're all divided up right now, based on ecosystems, they're all against the base underlying. So for Cardano, it's the Cardano ecosystem against ADA, or for Ethereum, it's the Ethereum ecosystem against Ethereum. But Simon was kind of mentioning there cross-chain indexes and things like this, which is really our main goal. And then we can, I don't know, probably give like a USD and BTC versions and things like that, something that's kind of general. But yeah, for right now, they're all their base underlying and the ecosystem that is built on top of it.
Yeah, and the ultimate goal, right, to keep that in mind, is always to have more of the underlying. Right, you use a Xerberus index if you want to have more ADA at the end of the day, or more ETH, or more SOL. And so it's a very interesting way how you can just put your money to work, your hard-earned ADA, and just know that if the market keeps rolling and keeps going, you will have more ADA than you had otherwise. So it's a very strong way. And if I think we in crypto, we are really we're so teased by strong returns, right? But when you actually look at that, right, this is 250, that's 330 next. So these are, but it is the opportunities that we have in the ecosystem, and the idea that I can have almost but the 3x with literally a broad spread to over 50 tokens is incredible to me, right? Like to me, I personally, I would not know a better place to put your ADA. Of course, you can also have DeFi strategies, and in an advanced portfolio that should have its place. But there's actually no reason why you should, leave 10,000 ADA in your wallet doing nothing, but maybe staking, and do not allocate in one of these vaults. So it is really the best place to keep your ADA if you don't need it for anything else.
Yeah, and I suppose I think I mentioned earlier on, this can be part, for me anyway, it will be a part of my overall strategy, because I always split my portfolio into different aspects. There's some it is going to stay staking. It's the lower return, but it's the safer. I have some that goes into DeFi, some I actively trade myself and different things. And you can put different portions into all of it. And the idea of keeping it against the underlying asset, I like that, because to me, that's part of the longer term strategy, is that you're trying to accumulate more of the underlying token, because you do believe in the long term. Even we go through, you mentioned going through cycles, markets are going to be up and down all the time, but in the longer timeline, if you're looking to accumulate more of that asset, whether it's ADA, Bitcoin, Ethereum, then you're bullish on it in the long term. So you don't really care about the USD value or euro value in the shorter term. It's to get more of that for what you think is coming in the longer term. So in terms of, you mentioned a few times the token that's coming up with this. Some people mightn't be aware of, there is a token, there is nodes, there's a whole other side of this. Do you want to talk a bit about that, where the token fits into this, or what it's going to do?
Yes, I think that's a very, very good question. So basically, again, being a blockchain, a partner chain, makes us in a way very similar to ADA. So we have a token that fulfills the same purpose that ADA does. It is used to be delegated to stake providers who keep the network going. So we call our stake providers node providers, and what they do is they compute the risk model. And that is what you use the fungible token for, the fungible token, in fact. So the normal token, the Xer token that's going to be launched on the Minswap DEX on the 11th of November. That token, when you stake it, you will get rewards. In the beginning, these rewards will be based on the purely based on emissions of new Xerberus tokens, but that is not the case in the long term. In the long term, this network provides revenues directly from its index vaults, and that is. Let me share again the screen. Perfect. Show this one, and this revenue long term will come from products like index vaults, and it will come long term from products like our risk already. I just want to show this before we go to the NFTs. We saw that if you want to really understand how Xerberus makes money, I really recommend you to go on our website, read the token paper, where we show you this value creation process, where we have an input like data and compute, where we have a value creation process from nodes to score to consensus, and have an output to like risk ratings, collateral pricing, leverage pricing, and the point of sale and real customers. And one needs to understand that we already have our first customers onboarded, building on Xerberus. And we also give in very simple numbers to make it just as an easy numerical example to understand how much Xerberus could earn. From our customers, we gave you these numbers. So we just assume we have $10 million in our index vaults, and then we just have a performance of 80%, which again, if you saw the vaults right now on the platform, right, they all, like the lowest one has 2.5x. So that's a very bearish way of calculating it. But if I put there 300%, I let's take a number that is reasonable even for crypto. So it's a lower bound number, right? But a long story short, in the end, if we would follow just this simple example, would make almost $2 million just with that protocol, right? Just with a $10 million vault. And I think we have potential in the bull market to cross that range and have more than $10 million TVL in the protocol. What else is there to say? Exactly, the staking reward. So in the beginning, we have a staking reward which starts at 15% and goes down continuously for the people who buy the token and stake it. Most importantly, they need to stake it. After that, and we aim basically when it hits. Let's see. This is anyway. There's still a graphic mistake, so this should be 5%. So when it hits about 5%. After between months 20 and 40, the revenue should kick in and subsidize it, stabilize it on a reward of consistently 5%. Exactly. Now this is, you asked now for the nodes. Let me go to this one if I find it.
Yeah, just I suppose comment on that when you're getting the nodes. I think it's important for every chain to have an income model, in that when will the chain actually generate income, rather than just depending on we're going to print new tokens all the time and that's what's paid out to users. There has to be something else to make it sustainable. And if we look back at Cardano, which most people are familiar with, the staking rewards are going down all the time because there is a set amount of ADA and that gets distributed every epoch. But right now the transactions aren't high enough to start impacting that and start pushing the staking APY back up. So what you guys will have is the fees that are a part of the different vaults. That'll be used then to supplement the staking rewards for users, which I really like to see. And is that coming back to the user in the is it the Xer token, or what's the ticker?
It's the Xer token, yeah. It's like, so we had a lot of community votes about it, like it's XER. I like XERB, but then people said it's too close to XERB.
XRP.
I mean, so then this got voted out. But I think we stick with the like the, you know, the.
Okay.
Quite funny actually. So the community has decided, so it's this ticker. They will go out on MinSwap on the 11th. And yes, you're absolutely right. Revenue is one of the most important parts that you can believe us. Being a product or a team that was formed in the bear market, we're very well aware, you know, like we build our model not for the bull market. We build it to go through bear markets. And therefore you need to have a consistent customer base. And you need to have a very clear point of sale and a customer who's willing to pay for it. Right? And this is Xerberus is built for that. And I think it's very easy to see how it could work from a way whereby index vaults create fees, and fees are then given to the treasury, and the treasury always aims to pay out a consistent staking reward to the people who keep the network running, which is the nodes as well as the token holders who choose the nodes who will be validate data for the network through the delegation.
And at the beginning of around the beginning 20 months, it'll mostly or be primarily the Xer token that will be given the rewards. And then after that, because of the fact that we're getting profits basically from the index vaults, I don't know, Simon, if we've talked about having it be paid out in the underlying or being paid out in the Xer token after that, because eventually the treasury will go down, right? I'd imagine we'd switch over to the layer 1.
Exactly, and the goal is always to either receive L1 tokens after the Xer tokens are emitted, or stables. So that's really something that the DAO needs to decide. So what we will do, we will probably accumulate the revenues that we make via the index vaults in the treasury, and save it for the first time where emissions are just enough to subsidize the staking, and then switch it over to stable coins to be able to, during the bear market, to just consistently pay out staking rewards just in stable coins. So again, we have to see how exactly this will work out, but that's the goal at the moment. And again, coming out of a bear market, right? Like this protocol needs to make money, right? It is clearly to sustain itself, right? Like if it cannot sustain itself, then we didn't do our job very well. So this is, of course, it's a key element of designing Xerberus.
Yeah, that was going to be the next question I had, was the tokens, because obviously in the fees you're earning the L1 tokens from the fees rather than earning the Xer token. So it's good to hear that will, I suppose the DAO will decide whether that's used for buybacks for Xer to pay that out to the nodes, to the node and the token holders. It's not just the nodes that earn staking rewards, or it's the users.
It's exactly like in Cardano, whereby a node receives a reward that node provider shares with its delegators, right? They can set a percentage of how much they want to share it, right? Like Cardano did it so perfectly. There's no reason for us to really, we build on all that's good. The only thing that would really change from the Cardano model when it comes to the staking side is that we introduced the NFTs to, and their purpose is really, so it's not permissionless to set up a node. You need to have an NFT insofar as you can call it a permission, because you also have to deposit 500 ADA when you set up a stake pool, but you have to have one of these NFTs. And the real economic reason behind it is simply to reduce the number of possible nodes, so to make it easier for a node provider to be economically viable. That's really the whole gist of it. But we have a very, very beautiful community around these NFTs. So it's, we're quite proud of that.
Yeah, and our chain is very similar, where in Cardano, where you have nodes or pool operators validating blocks of transactions, we have nodes validating blocks of small slices of the risk score, basically. So they get basically the chance to be able to mint a block of this risk score. Once they mint that risk score block, they're able to be verified by the other nodes, and then get a reward based on that.
And just actually for this, it will be its own chain or partner chain. What wallet will people use? Can they still use a Cardano wallet, or will it be a Cardano native asset, the token?
So the token will be a Cardano native asset. There's often a bit of a confusion I feel about the partner chain. So the partner chain are in one way very independent, and also ours because we have our own validator set. But the economic reality of the token lives on Cardano, right? So you will need to be able to bridge over the token to the partner chain to stake for governance in these actions. However, these never happen. There will never be a DEX or anything on a Xerberus chain, right? It's really just an interface. You bridge it over to your interface to do certain governance actions. But if you want to trade it, you do it on the main on Cardano, which is of course the main chain. And that's where the CNFT lives. So there will be no issues for people with wallets or anything. They can just use the normal Eternal wallet. They can use the Gero wallet. Yeah.
Okay, good. Good to hear. And nodes, kind of touched on a bit there. I jumped in when you were finished with the token before you went to the nodes, but you kind of touched on them there with the NFT. It's the NFT. So some people are familiar with World Mobile. Your NFT is your license to be able to run a node within that network, which I'll be doing there, and hopefully being able to run one as part of your network too. But do you want to give the overview of that? I know we've touched on bits, but just how that works.
Well, I think you summarized it so perfectly. There's almost nothing left to say for me. It is really what you just said. It's a license to run a node, and the license assures you a certain compatibility. So it's not too competitive to run a node because they are just a limited number of nodes. And also our nodes, this is an important side to understand. So we grow the number of nodes that we need with the number of blockchains that we support. At the mainnet launch of Xerberus, we will support full blockchains. After that, our goal is to add another blockchain at least every 3 months. And I really stress at least because we might do it faster. So that means that the number of new nodes which come online increases by, at least every 3 months by 15. And that quickly sums up. So our goal is to really drive up this linear, this curve that you see, right, the green curve with the blockchain, and hit after the 30 months almost 20 blockchains that we support, or even faster, right? And that really then increases the number of nodes and also decreases the number of NFTs you need to set up a node. It's a bit confusing in the first moment, but actually it's quite easy. So guys, if you watch this, you want to run a Xerberus node, just ping us. We're also working on a test net, so you can literally just ping us and get your hands on the node if you like to. It's all there. We're fairly far in progress in that, and we're always happy to help out our community. So if you really want to be part of this, don't worry, reach out to us and become part of it.
And so I think from me looking at it, this comes back to the making the chain financially viable as well, and it has to be viable for node operators. In the more chains you have, there should be more income being generated for the whole ecosystem, and then that means that you can afford to have more sharing that revenue with more nodes. Is it?
You are so right, Paul. And this is exactly where, when you go through this document and you think about buying this token, right, we put so much thought into how do we make this economically viable, because we want to have a network that just runs and produces income, rather than just hoping that the token price goes up and we can always sell more tokens. So that's not a game. It's really about how do we build an economically viable and circular system where there's always new money coming in to produce even more returns, to produce even higher expansion. Again, we are a bear market chain, so we want to build something that lasts 20, 30, 50 years, and therefore it needs to be sustainable.
Nice, and it's good to see another question coming in instead of me rambling here all the time. Crypto Intelligence Agency, thanks for joining in. Do you guys convert the ADA to ETH and invest it for us? So then this comes back to where obviously you have the Cardano index, but if there's an index on, I think you showed Ethereum and Polygon. What can people with ADA invest in them, or do they have to have the underlying tokens?
As it goes live right now, so I'm not sure if you can see the full screen now. Yes, you can see in the top right, there is the network that you select. You do have to have the wallet of the network. So if you want to buy an ETH index, as it is currently, you will need Ethereum, and you pay directly in, and then it's done from there. I think that answers the question, but I do want to add the second one. Long term, we want to have the cross-chain indexes, right? And then you don't need to worry about that. You could buy any index at any chain with any currency. But for now, again, we're starting, right, with these indexes that come now out, fairly soon after the token sale. and we start simple. We want to get it to work, and then we guys can make it more complicated and more easier to use and less complicated in the future.
Yeah, and I think this all comes back to the UI UX of crypto, how we need to have it simplified that people coming in, they want to come in to be able to use passive, I suppose, assets like this, and they don't want to learn how to use a Cardano wallet, how to use an Ethereum wallet, how to use a Polygon. They want one that they can come in, use, and just that takes away all the complexities of it. So Javier says here about just on the NFTs, in the long term, will it require just one NFT to run a node?
Yes, that is the end stage of it, right? Like when we have scaled to, what was it? I think 50 blockchains. Then this will be the case. So yes.
Okay. And the timeline, that's just to put it into perspective, people, that's not kind of this year. That's, was it every 2 to 3 months you're looking to add a new chain?
Yeah, it's not soon.
So we talk about, like 5 to 10 years. We think long term.
Okay. Okay.
I mean, like it sounds crazy, right? But I mean, you guys remember when Cardano was just a testnet, right? When we had the Bryson wallet, like this has been 7 years, right? So a decade flies by fast when you're out and building a blockchain. So it seems short, but I'm pretty sure if you're the guy who still has this NFT in 10 years, you're the guy that everybody wished there would be, So like we all wish would have bought Bitcoin early on. So I guess it's
yeah, you're not looking at the short term game here. You're in this for the long term play. Jonathan says, is there a minimum time in owning the node NFT to get a drop in the token? So is there some of the token going to NFT holders, and is there requirements on that?
Honestly, we've never thought about it.
Yeah,
you got us cold spot. I think we'll make a snapshot that day. Yeah.
I think honestly what it will be is there will be a snapshot, and the snapshot will be the day we get around to sending the 1% to the NFT holders. So yeah, if you have an NFT, right, I would recommend holding it right now, maybe not lending it out or anything like that. But there's no set specific date for a snapshot, and we're planning to just whoever has an NFT to send the token.
Yeah,
I suppose just on that, will people get notice of when that's going to happen? Just some people might have them listed on the likes of JPEG or listed on lending and borrowing, things like that.
Yeah, you're right. We should we'll make an announcement. We'll do like a week. We'll do a snapshot. We'll make sure everybody gets it. We want to do it the fairest way possible.
Yeah, I'll make me a note right now after this call. I will manage that. I'm sorry, man. Like we'll get it.
We'll send that to the marketing team.
Yeah, sorry guys. Yeah, we should do that.
Yeah, that's good. Thanks, Jonathan. Appreciate the comments. Crypto Intelligence Agency says he wants to deposit one currency and not have to worry about what chain it's on. I think, that's back to the UX.
So do we.
Yeah, I think we all want that. And new people, we all understand the wallets, how different things work. But new people coming in, they don't have to understand it. Make it as simple as possible. Bitcoin, also please make BTC network available. I don't know if he means being able to trade runes and things. Having
runes are on the short list of the next chains to be added.
Yes, 100%. We already talked to GoMaestro for the BTC infrastructure. There's literally, if it wouldn't make a token sale, we probably would already be on it. So I think after the assets of the Cardano, Ethereum, and Polygon would probably or most likely be, I know it's already Solana and BTC. So this is, and then I think we have the majority of the crypto market, and then what comes after that, I think the DAO needs to decide.
And we look at the cross-chain indexes and making that simple process. So kind of, I'm looking at the time. I've asked a lot of what I wanted to ask. Anybody watching this, you do have questions, let us know. You've mentioned the token sale. It's happening on MinSwap. It's a busy month for MinSwap. There's a few different token sales happening over there. What's the timeline for years? And then anything else you want to cover?
So the timeline is really that the 11th of November, it will start. During the day, we'll probably make it 2 days, 48 hours, and that's really it. For us, it's really important that people understand that most of the stuff for Xerberus is already built. We'll also launch a few more things. Oh, it's such a full calendar this week; it's unbelievable. the work out that people can look at. Guys, I think then, if I have to make a call to the community, Xerberus has been around, and I think there are always a lot of token sales, and there's always amazing project, man. Like Cardano produced so many amazing projects. I think it's always a hard choice, but I also think that Xerberus has been around, and I think there will be a lot of people who really want to be part of this.
Nice. And is there a minimum? It has to hit a minimum threshold, or it's the token happens no matter if you raise 1,000 ADA or 1,000,000 ADA, or?
That's a very good question. So we discussed this internally. It's also something we have to decide in the last few in the common days. We always have an internal discussion about that, because on one hand, that doesn't, like we need to get the token running so that our decentralized network works. That's really the primary concern. We'll put out a post about that soon.
Okay. I suppose from what I see, you're not using this as the funds that have to build the network. Obviously, you've said there it's already built. It's more you have the revenue models built into what the product can actually do. So this part of this is more about getting the token out there. Obviously, funds will help speed up certain parts of development, but this is more about getting the token out there to really kickstart the ecosystem.
Yeah, exactly. And for the economic security, right? Like some people are now nodes have been traded up by the community a lot already. And if you build these index vaults and you have tens of millions, maybe hundreds of millions of dollars in it, the token price and the NFT price need to be able to protect that, right? So you need to have a certain resistance against the 51% attack, right? So in other words, right, the network always needs to be at least twice as expensive as the things that are in it, right? Otherwise, you could get 51% and you make a profit by cracking the network. So we have to now build economic security, which means we have to get the token out, and we have to get the NFT out, and we have to get a nice price dynamic to achieve that economic security.
Again, just when we mentioned there 51% attack, and that the user funds, they're locked in a smart contract. So the user funds aren't what can be attacked. It's the network and the risk ratings that can be attacked, is it?
Exactly, but they control the smart contract.
So I suppose if someone's smart enough to know which ones to sell, and they can set up their own buys and sells on the other side to try and profit from them, there's
A 51% attack would look like tricking the risk model into investing into a token of some sort, right? So you can maybe invest in that token beforehand and then put it up in a really high risk score, or you can take your nemesis token and make them have a really bad risk score. So then that liquidity would be exiting out of that token. That's really what a 51% attack really looks like. But really, what we're trying to do, and what we really need to do, is we need to get this network going, right? So we can start diversifying these calculations and really start really getting it working, right? Because a 51% attack sounds really scary, right? But it's a lot easier to socially engineer me or Simon and getting it to our computers and change the score that way, right? That's a lot easier of an attack. So the only way that we feel is the safest way to do this is really get this token out, get the network going, and really start operating in a decentralized manner as quickly as possible.
Yeah, and I don't know if we mentioned timeline for actually launching the first indexes for the likes of me that could invest in them. Is there a timeline on that yet?
When the Matera network goes to main, which should be this month. Yeah.
Okay, nice.
Yep, think a few things to batten down on my end as well, but yeah.
Yeah, we'll make it.
It's a reasonable goal.
I have no idea what a ride it is to build a crypto project. I mean, like, it's if you see how tired Noah and I'm right now, so it's like, guys, it's a life, man. It's very exciting to be in Cardano right now, but what a ride, man.
Yeah, infinite things to do.
Yeah, and I suppose if you're launching this month, audits, has been audits on the contracts yet, or what?
So that's why we use the Matera contract for now. So the first version of the index vaults is really, we do it in Matera because they have been audited. So that's where we connect as part of our risk model to the Matera protocol. It's extremely important that this is safe. This is why we will cooperate with a lot of other index protocols that that host them. And this is really, so Xerberus really is part of that, right? Like it's an index protocol, and Xerberus provides the risk rating. So that's why risk ratings and index vaults, they sound different, but they're really the same, right? They're just an application of the risk model itself. And in that sense, this is why we have to wait till Matera goes live, which I'm 100% sure it will soon. Great, like Daniel, the CEO of Matera, we have so amazing founders, and he is one of them. Huge respect for him. So yeah, I hope I answered your question.
Yep, that sounds good. So I'm gonna leave for another 5 minutes. If anybody watching has any questions or anything like that, and while we're waiting to see there, if not, we'll wrap it up in the next 5 minutes. But anything else from you guys in terms of where people should look for doing their own research into this, deciding either for the sale or keeping an eye waiting for the vaults themselves? Do they need the token to invest in the, I don't know if I should be using the word invest, or but get involved in the indexes? Do they need the token, or can people get involved in that anyway?
They do need a token to get the best indexes, and they need to have a token to have the passive income, right? Like the Xerberus token is all, you know, like I bet you can build, invest, and that's what I would do in a Cardano index, you know. But Xerberus is of course the bad thing of the entire ecosystem, right? And there are parts to Xerberus which extend the indexes, right? For example, the risk oracle that we use for the risk for the indexes can also be used for dApps. And I just today, you know, it's so many, like, there's so many applications for this, for lending, borrowing, option pricing. So investing in the Xerberus protocol is a bet on Xerberus. Investing in an index vault is 90% a bet of in the ecosystem and 10% a bet on Xerberus. So this is really how to think about this. And if you want to be informed, the best place is of course the website. We just recently made it much prettier. Let me jump back to the main page, and you will find all the key information on there about the risk ratings. And when you click here on the token paper, you literally gain access to the token paper, and it contains about any information you can imagine. I think that is the single best point to learn about Xerberus.
Yeah, and we started this conversation off at the very beginning, kind of talking a little bit about liquidity issues with some of these tokens. And so when Simon was talking about with the best vaults and which vaults are available, some of these vaults are very attractive in a way, right? But they have some of these more, like, we need a smaller amount of liquidity going into them, at least at the beginning. So these types of things will be available more for our token holders, as well as if anybody remembers our old website, we used to have a lot of analytics on our website as well. We'll be slowly releasing this back out for token holders as well to show them kind of behind the scenes of the risk model, and give them some like graphical designs of the risk model to make it a little bit easier to understand. But primarily, I don't think in general, right, you won't need the token to invest in the funds. It's really more of a tool, and what we're building is these risk ratings and this risk rating blockchain to build tools like index vaults and things like this moving forward.
Okay, and finally for me then is bringing it back to something completely away from that, is the reports that you do for Siren, I think is the name of it. That's still going to be available for the community to use to track. Unfortunately, hacks, stolen funds are going to continue, but that product is still going to continue from you guys as well.
Simon, you're muted.
Simon, you're mute.
I was saying it's not only there. Get the screen up again. It's much better. It's now much better. So we don't talk much about Siren because ultimately, you know, Siren is a thing that we do with the quantitative capabilities that we have for free to the community, right? It's literally it's our way to show love to the community regardless where you're from. We know that a lot of other people would charge a lot of money for this, but this is now the new Siren. So you get these reports. Again, you submit your case and you get these reports. They're completely automatically. So there's no human who made this. It's not XGPT. That's just the Xerberus backend. And I always want to, you know, guys, if you have any doubts about the capabilities of Xerberus, so just check out Siren and be like, okay, that's pretty good. So this is now, we reworked it to make it much easier to understand. So you have this map where you can zoom in, where you can move dots around, and you have these icons now that I explained here, and so that you can understand what happens. So victim wallet, that new exchange addresses, minting wallet, storage, the diluted scam, transfer wallets, and unknown wallets. So it's really there. There's a whole library where you can browse cases of the past. Yeah, and again, go for it. Yeah.
Yeah, I'd like to mention that this too also will be open sourced, and we'll be hosting lists of scam wallets and scammed wallets using Agon and things like this. Really, this is a side branch of what we were able to do when we were doing our analysis for our risk ratings. But yeah, it's absolutely still here. We have people on our end. This is our full-time job to kind of. There's still some things you can notice. There's that really busy part of the graph right there. That's making me annoyed. So there's still a little bit of filtering here and there to work out, but it's getting really, really good and really, really accurate. So it's really cool to see it continuing on.
Yeah.
And this tracks. Sorry, this tracks ADA, does it, or can it track the token? So if one token has been sold and then the token is distributed to multiple wallets.
Anything that's in our system right now, it'll track. So all the tokens we use on our system, as well as the underlying as well, and on Ethereum as well, and I think also on Polygon and Solana as well. But that's not released yet. So
that's some alpha there, is it?
I guess so.
So we won't get political here. We'll all be interested tomorrow to see how the vote goes for crypto's sake, even us outside the US. But final question here is, so could you guys get bank accounts blocked by the police? I think the user still has to report the case, and they could use this as part of the evidence, is it?
Correct. Yeah. We really want to provide a simple way for people to be able to go to these type of entities if they would like to, and report what happened to them, right? Ultimately, we're never going to have a good and healthy financial system like crypto unless we start doing some regulation of some sort, right? And we start getting out the bad actors. So like these graphs are very nice and they're very nice visually, but we also, I don't know if it's here right now, but we also will provide a downloadable link for an Excel file that's much more legacy, if you will, that people can really use to explain where their money went and why. And then the idea would be that those law enforcement people would go to the centralized exchanges and get KYC and proceed from there. We really just want to provide the data for those people if that's what they want to do.
Yeah, and this is really the big service that we give, right? Because normally these analytical firms who provide them for you after you've been victimized charge you, with a lot of money to do this. And what you can do now with the link system in Siren, each of these reports has their own URL. You can literally send it to the police, and in case something happens after you submitted a report, the Siren thing will still upgrade by itself for it. Mm-hmm. And so the police always up to date and most informed. And one other thing, so people have heard us talking with cases like Shrink and other cases where we help. I think the brutal truth is, like, these processes take forever. Like if you really want to get your money back, it takes years. It literally takes years. First, the police need to accept it. Then it needs to be relevant enough. Then the exchange needs to be hold. Then there needs to be freeze. Then there needs to be a court case. If there's even a court case, if there's no court case, it might go quicker. But if you have a court case, then yeah, you have an appointment in 2027, right? So this is a real thing, I'm now the CA. Hey, boss. Yeah, maybe you would do a better job, sir. So thank you a lot.
That would have been easier when I was calling out the full name every time for the questions. If I just had to say CIA. But yeah, I think that's probably, I don't see any more questions coming in, but I think that's a very positive place to finish up on what's available to users. Unfortunately, like you say, it can be an extremely hard process to get your funds back. But the idea of something like this, I suppose, is to scare people off doing these types of things in the first place. If it can stop some people doing it because they realize how well things can be tracked, then hopefully that does save some users, because I get a lot of messages, emails on all platforms about everything, general questions, how to do different things. But them kind of emails where I get, and people don't even realize that they've lost their funds yet, and they ask me to look at a transaction on chain to see, do I know what's going on? And my heart always sinks when I have to go back and reply back to them to tell them that, unfortunately, your wallet has been compromised or someone's got access or something like that. And I want less of them kind of messages, because you're breaking some really bad news to people. But for you guys, the next week, 2 weeks isn't going to slow down. Maybe the rest of the year isn't going to slow down, but I will leave all the links after this. I'll put them down in the description. Anyone who has watched live, I think where YouTube has been quiet, but we're up to 570 on Twitter or X now. I think I'm starting to notice that there's a lot more people watching content on Twitter and tuning in to different streams. So it's good to see that over there. But the links will be below over on my own Twitter and you guys, your own Twitter. The links will all be shared out there as well. But Simon, Noah, thanks very much. Very best of luck for the next week. And we will catch up maybe after when mainnet is going live. We can catch up at that point.
Thank you so much for having us.
Cheers, guys. And everyone tuning in, thanks for tuning in. Do share it out. Ask questions in the comments below. I'll try and reply back to any that I know the answers. Any I don't, I can forward on to the team and get them to check in and answer as well. So thanks for watching. Subscribe if you're new. Give it a like, and I'll talk to you soon. Cheers, guys.